Right, let's do a quick vid analysis on gold. This is daily, so if we go back and we go left and we look at the historical high that was there for years and years and years and years since the last recession, that's 1921. So you can see yesterday it was a key area. If you look left again structurally, previous structure, you can see that this is a resistance area at the moment, and it just couldn't break it. This is why we were saying if it broke it yesterday, there was really nothing to stop it from flying up. It was a clean move could have happened up to around 1935, and then 1950 to 60 area, retesting this level up here 50%, and just keep going really. But he didn't want to do it. But perhaps now that it's done the whole shakeout to the downside, a nice big sell-off and a nice correction, maybe today we'll see if it's going to find some support and start working its way back up. So if we start drilling down to the smaller time frame, well, I say smaller time frames. Let's start with the 4 hour. So drill down to the 4 hour. What I've done here is I've taken that last sort of swing high, 1954 area, 1955. That's pretty much because that's where we made the big sell-off, started that big move down, didn't we? So it's a relevant area. You can see it consolidated, went sideways for a little bit. Usually I take the highest point, maybe these three highs here, three peaks, the highest one would be there, or you could scroll left further and look for highs still. But in this case, because that's where the move suddenly happened, I'm interested in this area, this range. This is of interest to me. So you can clearly see that we stalled at 61.8, having tested it cleanly three times. Got 200 EMA, exponential moving average there as well, providing that resistance. So triple top, EMA resistance, 200 EMA no less, which is the biggest one that I use. So powerful, relevant, plus a 61.8 fib. So three confluences: triple top, fib, EMA, major resistance, previous historical high 1921. All went up there, touched it, tapped it, rejected, sold off. Really good, makes perfect sense. And now what we've seen is the retracement. So the retracement went up and gave me a signal to short because it was coming up to, having broken through all of the major EMAs, it was coming up to test those EMAs, which are now acting as resistance. So you can see they're like they're just on top of each other, aren't they? So very powerful resistance. You can see price just bouncing off that. So if price does manage to tear on up at some point, maybe tonight, later, tomorrow, then it's going to go back up. Otherwise it's still bearish, and bias is still short on gold, for it maybe just to at least go back down and complete the N shape, which would take it back down to the 1870s at least for like an N shape, a double bottom. So that's really what we're interested in today for the moment. Drilling down further, this is the 1 hour. So my 1 hour time frame basically is using that triple top area, that 1921 high. That's the starting point, and that's your 0%, because we're looking at a retracement. We're looking at how it's going to move, and it moved really, really well last night and got down to the 61.8 where it's consolidated. Tried to do a false breakout to the bottom, to the downside, suck in a few sellers down here before using that liquidity grab to rally. And I've had several signals to go short, but I haven't taken them because we just felt that it needed to put in a proper retracement. And so each one of these needed to confirm and close, but they didn't, and so they're all invalid. But that's just part of my algo software that I use, so it's specific to that, so it's not relevant here. But point is that we're looking at fibs, aren't we, and looking at support and resistance, and you can see it's bounced off there. So now what's it going to do? The 1 hour is given a rejection, and we've been selling this morning back down to about 1890, so we've done that bit of selling. I want to see now if it's going to continue or if it's going to find another pump to the upside. And so we're just going to wait, sit on our hands for a little bit and just wait for it to make the definitive move. But like I say, if it was to continue short, that would be a nice play back down. That would be an easy play where we could put our stops just above and let it go. If it goes up from here, then it kind of just makes it a bit difficult to buy here, maybe having to put stops just underneath here. So we'll see what happens. But yeah, it's certainly looking a bit bearish and running out of steam. So that's the 1 hour. Finally, 15 minute. You can see I started looking at this about 6 o'clock this morning. Here we go. It started moving up from 1880. So we're looking at the retracement using that 1921 high. I'm using this on a 15-minute chart so I can watch the retracement up. So my 0% starting point is here, and so you can see it going all the way up. Got to here, I took a short here, put a stop just above about 10 pips. It stopped me out. It went to 92. I put my stop at 92, got in at about 91, looking for it to go down from 38, but it didn't. It spiked on up, so I thought, okay, let it go up to here. And by about 8:15, London opens at 8, so about 8:15 it ran out of steam. We had this closure, so I shorted it, and I got in at 96.95. I didn't ride all of this move down, but I took a chunk of it back down, so made some money. And then it's gone back up for a little retrace. Watched it again and just took some more shorting scalps down to until it got to about 90. So that's a double bottom there, nice little N shape. So that's me done at the moment. So I thought I'd do this video just to show you how we're using the fibs, EMAs, and the power of the support and resistance, previous structures. They're all relevant if you can package them all up and create multiple confluences, i.e. multiple reasons to enter and exit a trade or position. Then you've got a higher probability of actually making money and being successful on that trade. Hope this helps. Hope you can see the power of the support and resistance, and which is why I use it really. Then I've got other indicators that I use in conjunction to help me identify if we're going to see further upside or downside. But yeah, I generally reserve these for higher time frames like the 1 hour, 4 hour and daily. Any questions? Let me know. Feel free to ask. All right.